Hello, everyone, and welcome to the attachment point. This is the Roundtable edition. As usual, I have my co-host Brett Fulmer. Brett,
Hey, good
welcome,
morning. Thanks, Nick.
and we have our special guest on this Saturday morning, Billy Van Jura, who's joining us from an office that's looks like it's being completely renovated.
It's the basement space that's carved out for me on a Saturday that
The
went a little crazy.
the man cave. I love it.
Yeah,
I wish my basement was looked as good as that one. I part of the assignment I have today is to go into my basement and get rid of all the cobwebs, so I can actually go into my basement to make it look like that. So, uh, Billy, Brett, welcome to the attachment point, and we bandied about a few topics before jumping on, but we had the first and hopefully only major hurricane to make landfall in the United States,
hmm
Hurricane Florence last week, and it's brought up all kinds of issues. I was on Instagram this morning with Pat and Joe
Cool.
Hollier and his agency and John Bachman, and we were talking about flood and flood insurance. We were talking about how agents sell flood. So I wanted to start off that way and just kind of get the conversation going and almost continue from what we were discussing this morning, Billy, regarding flood. First, I think you're based in the New Jersey area.
Poughkeepsie, New York, actually.
Okay.
So about an hour north of the New Jersey border, about an hour and a half, a really nice train ride from Grand Central in New York City.
Okay.
Cool. Yeah.
So New Yorkers and New Jerseyans are like the same, right? It's like Irish, Scottish,
Not
Italian,
even
Greek.
close. No, I'm born and raised in Jersey, and yeah, no, I'm born and raised in Jersey. I'm not a New Yorker.
Yeah. Did you happen to have any exposure in the Carolina area?
Nothing whatsoever.
Okay.
But we had, if you go back anywhere from, what's it, 4, 5, 6 years ago now, Sandy and Irene
Yep.
came through the metro area hard, and they made their way up the valley in some pretty significant ways, um, which actually right around that time, just before maybe, is when I really started paying attention to flood insurance. About a year prior to those making landfalls, when I started to really learn how messed up flood insurance actually
Yeah.
is.
Yeah. So I had a Twitter rant this week, and then I followed it up with a poll. I was hoping more people would vote on it, but I basically threw out there what are the common excuses for clients not buying flood insurance from agents. The ones that I could think of off the top of my head were this place has never flooded before. I live far away from the ocean slash river. And what was the other one?
My mortgage didn't require it or something like that.
Yeah, or
Or
something
yeah.
like that. And then Pat Callahan came back and he said, "Oh, you forgot another one. I'm already paying too much for insurance."
Yeah.
So it's
Exactly.
kind of topped off. So Billy, I mean, you're an agent. You had customers and clients, and you were directly affected during Sandy and Irene during those two events. Your perspective, what is it on flood insurance?
It's all of them. They're interchangeable, actually, and I think what gets overlooked, your bare minimum flood insurance
hmm
policy, for the sake of even numbers, is anywhere from $400 to $500 a year. But to just throw $400 to $500 in extra expenses onto a household, because right now it's viewed as an extra expense, you almost have to
Yeah.
put it into context as life insurance, which is
hmm
crazy to say it that way, but it is an extra expense. Now, that's the money part of it of, I'm already spending too much on insurance already. They don't see the value because they shouldn't see the value. I'm sitting in a home that's in a preferred X zone. There's no
Sure.
water anywhere remotely nearby, but you go less than a half mile away and there's a creek, and all the houses along those creek are in an AE zone. But here's where it kind of meets things where I think it'll be interesting. And I think Brett's got some tie in with Yep there. And I spoke with Emerson earlier this week. I'm really
Cool.
intrigued by some stuff. Keep in mind, since Sandy and Irene here, and this is going to carry out in Houston, it's going to carry out in the Carolinas, the maps have changed probably a half a dozen
Mm.
times. So, to your, well, nobody's requiring me to buy insurance. What we're preparing for is a complete reversal of that, where if you have a mortgage, you are going to be required to essentially subsidize the flood program. That's what I see coming, because there's no fixing the broken system that's there now without a lot of funding. And the private options are the options. Government should get out of the flood insurance programs because there is no money for it. But all your excuses are spot on. It's going to be a wholesale change in how agents view it. And keep in mind, although you may think it's easy to sell flood insurance because you're asking all the same questions, most computer programs aren't equipped to do it in a seamless fashion right now. Like, check this box and buy flood insurance. It's check this box and go to the next set of screens. When you just thought you completed a nice auto home umbrella deal, now you're going to try and wrangle this in. It's a clunky new behavior that has to be taught.
Yeah, no, that fits my experience. We were in discussions with the wholesaler, and we were talking about how to potentially integrate a flood quote into their homeowner's quote. And we told them ahead of time. We said, if you get to the end and you add flood, you might potentially lose them. So the checkbox has to be at the front. That way, all the work is being done as they're doing the traditional homeowner's quotes. And then when they get to the end, it's like, here's your homeowner's price. Oh, you said you were interested in the flood piece. If you wanted flood, here's the additional layer for that. And I think they kind of got it then. But I think you're absolutely right. It does come across as an extra expense, and I think part of the big issue is if you're outside of a flood zone, you don't actually know what your risk is, because the flood zone itself does not tell you anything. It only tells you whether you have to buy it or not. It doesn't actually tell you what your flood risk is, and that's dangerous because, like you said, if you had a customer that was like a mile away from the nearest flood zone and they knew that information, not a mile from the stream or the ocean, but a mile from the flood zone, and they know the flood zones are faulty and constantly changing, could that be ammunition? Could that be a sales element to help encourage them to at least think about it differently?
Oh, I'd say absolutely. But keep in mind your one line you put in there. I have realtors I have to correct on a regular basis. Every single home, every single property has a flood zone assigned to it. Now, whether it's correct or not is a whole different discussion that we don't have time for.
Correct.
But your home is in a flood zone. It's just a difference of, to Brett's point on your survey as well, will the mortgage require me to buy it? What does that actually mean? And I think, Brett, we both got a little tied to Hazard Hub. That thing right there is just, I don't know what to tell you, whose data is correct or who's not correct. That it's going to go a whole different way real soon.
I love Hazard Hub. So we use them. So
Nice.
they're a part of what we do. We have multiple services. So I can tell you, Billy, when you're communicating, or Brett, as you guys are communicating with folks that are out there, the FEMA flood zones are not adequate at all. So there was, again, maybe I spend too much time on Twitter. I shouldn't probably volunteer all of this information, but there was a gentleman that put he had 10 awesome photos of locations in the Carolinas with the slider. And as you move the slider, it's like before, after, before, after when it comes to flood. So I asked him, I said, would you mind if I took these maps and layered flood maps over them?
That's cool. Yeah.
Whether they were right or not. And I ended up using Intermap's Insight Pro. And that's what I did, Billy. I took, I tried to find the right resolution of it. And then I layered FEMA and pulled it off. Then I layered another flood map, pulled it off. And I layered a third flood map and pulled it off. And then I put all three together. And sure enough, once you put all three together, the image was all colored. Orange, yellow, purple, like from low to very high. It covered all the bases. I think that out of the 10 locations, there was only one where I think all the flood maps kind of missed it. It flooded, and the flood maps didn't really indicate that there was significant flood risk. But the rest of them, it was like all colored. You couldn't even see the homes anymore because the colors were all stacking on top of one another. So, to me, that's the communication is what you said, Billy, everyone is in a flood zone. Just a question of degree.
You think of like a hurricane or like some sort of major catastrophic incident, but what about just heavy rainfall and drains that fail in a community and you get 6 inches of water in a house,
Correct.
you know? Yeah.
Correct.
Like,
So I don't know where you guys live. The house I'm in now, this is my mom's house. It's this is the house I used as the use case as I was preparing to create a flood product. We are 150 feet above the nearest water source. So there's only one way water can get in. That is, it rains 15 inches in an hour. The water has no place to go. And a deluge comes into the home. That should be very rare. And that's what the models say, extremely rare. And I mean, around that, the situation is, it from an insurance perspective, if you added it to a homeowner's policy, it should cost $100, not even.
I think it's just gotta be seamless, though.
I think everybody would buy that coverage if they knew if the low risk areas, Billy, if it was $100 extra to cover, 250,000 in replacement value, 100,000 in contents, 50,000 in loss of use. I think most rational people would buy that.
You're not wrong, and here's exactly how I can prove it. Are you familiar with the sump and water backup endorsement on a home policy?
Yes.
We stopped discussing it 8 years ago.
You just added on.
We don't even think of it as adding on. It's just what we write. Now, you're correct. Technically, we have added it onto a policy, but as far as we're concerned, we didn't add it on. It's just the policy we write. We don't allow the company to decide, oh, it's an endorsement, where like we just write it. So I don't believe you're wrong in saying, can we make and I don't think even 100 is necessary. Can we make a $200 to $400 endorsement, if you will, to a homeowner's policy that isn't even noticed, but really has a big impact? And the answer is 100% yes. I'll tell you a quick part of where I think some of this is heading, and it could be a ways out. I'll give a little InsurTech kind of tie-in. Hartford steam boiler. Hartford steam boiler is fascinating. You really got to watch them. I mean, you should be watching everything Munich Re does. But Hartford steam boiler developed a service line coverage that 2 years ago, maybe when I heard about it, I couldn't get anybody to pay attention. A year ago, I started getting some whispers. Now it's part of the offering of a couple of the companies we work with by simply checking a box. And it's the price point, however they figured it out, is not even noticed. So now we're not quite at that water backup level with that yet, where it's just a default, but it will probably be that way within 3 to 6 months because the coverage is so important and it's right there. You don't have to think about it. It's just a box that's already checked for you. So I don't believe you're wrong.
Coming in from the outside, just getting legs under an agency right now, are at the point too, Billy, where you got a really good book, you're taking care of your clients, and now it's more about the proper coverage. It's not going to backfire on you. It's setting up people right, which I think the long game, everybody should be playing that way, but it sounds like you guys have kind of evolved into that.
Well, let me interrupt, Billy, because I think that's huge. I assume, just by the way you're talking, that you consider yourself a trusted advisor.
Oh, yeah, I don't.
Okay.
That's what I'm here for.
So at what is the line where you have to walk away from a customer because like you need these coverages, and the customer saying I don't think I do. What's that fine line where, as a trusted advisor, you need to step away because they're just not taking your advice, and it's not fair to you as the trusted advisor to give this advice and have them step away from it?
That could be a 2-hour discussion, so I'll keep it as short as I can. For us, it's very simple. Here's your offer. Because 9.5, if not 10 times out of 10, I'm providing more coverage than you currently have. And in theory, my rate's already better because we've looked at different companies, right? So the fine line is when the person starts fine-tooth combing this stuff, we just say, listen, this is the coverage we offer. This is a really solid plan. It improves your coverages. It improves your rates. When would you like to start? There's part of that sales mechanism in there where we just go with it. Now, if somebody does push, there is very, and I mean very rare exceptions made for the person that we make an accommodation for to kind of steer off our process. So to Brett's point or any new agent's point, this is where the insurance world is heading. This isn't a label you can buy to be a trusted advisor, right? People come to you for advice. The companies don't help you because they have so many endorsements you can quote unquote add on, so many levels of coverages you can choose. We just start at or very near the top, and that's our offer. And because we've built up a pretty, I'd say like a perpetual machine funneling us new opportunities, quite frankly, we don't care about the person that doesn't want to do things our way.
Mm-hmm.
And that's not meant to be rude. That's just, I've got 5 people waiting at any given time. If you don't want to do things our way, 4 of the next 5 are going to want to. We'll just go to them.
Well, that's the whole point of being a trusted advisor, right?
Yep.
Your way is what you think is the right way. And so for them to choose something that's not that, they're choosing, in your opinion, they're choosing something that's the wrong way. And ultimately, you're going to have to face up to that when that bad thing does happen that you were telling them they need to protect.
Yes. And that's part of the underlying thing is that in theory, most of these people are within a short drive of where we live. So we know when things happen. You don't want to wake up and say, man, we've gotten pounded with rain. I sure hope I added water backup to that policy.
Yeah.
But it is a tough one. I hear you on those new agents, but if you hold the line early, you'll be that much better down the road because you're going to build your reputation and your brand along the way.
Yeah, got to play the long game, definitely.
Yeah. You had brought up real estate agents. In our email discussion before this, we talked about first how much they get wrong, they misunderstand about the flood market, but also how much pull they have.
Yeah, I didn't realize that.
You know, in getting legislation done and things of that nature. It is a bit of a problem, isn't it?
It was a problem, and it continues to be, right? As the expression goes, right? They keep kicking the can down the road and passing broken legislation. But if you go back to the original legislation passed after, I'm sorry, what happened around New Orleans?
Katrina.
The people that stamped their name to that bill, and then after 6 months, maybe a year, they realized just how bad it was because they got a lot of pressure from lobbying groups and adjusted. If at that moment in time, everybody stopped and said, hey, Aon, hey, Lloyd's, hey, QBE, hey, all these Munichs, hey, all these big companies with capacity, can you just do this for us? How would you do this for us? We'd be in a completely different situation now. Now the situation's gotten worse, right? So you allow these lobbying groups to step in, and the insurance ones are not immune to this, right? They could have stepped in and said, hey, gang, we have a problem here. We've got all this capacity. But if you go look at those original acts back around Katrina, shortly thereafter, yeah, there's some people that made decisions because they thought it would mess up the home buying market instead of saying, yeah, but how are you going to buy a home that's flood damage and now we've got to tear it down and rebuild, right? Or all these people stuck underwater in mortgages because they didn't buy the flood insurance, right? Because, hey, I'm not in the zone. I don't need to buy it. And now they can't pay off their mortgage. How's that going to impact things? So it gets really dicey behind there. So I just said, you know what, let me focus on the positive part of just educate them one at a time.
Mm-hmm. And then would the market adjust though too? Because I feel like your higher end, and it's not all just wealthy homes on the waterfront, but let's just say a few properties got the true rate and it was 2x, 3x. Maybe the value of the property might slip a little bit, but then you'd more accurately rate other properties too on the private market. And eventually it would all kind of hit an equilibrium, I'd have to think. I just wanted to,
yeah, you're not wrong. It's just letting the markets correct themselves, right?
Exactly.
That's all.
Yeah.
The markets will correct.
But as we know, if you can get legislation passed, or you could prevent something from happening that's going to keep the value of your home going up,
or just keep the machine turning.
Well, it's self-serving, right? It's I own a coastal property. If I get the real flood rate and then I try to sell this, they're going to be, first the value of the home is going to come down. I'm going to have fewer buyers that will potentially want to buy my home because the price actually reflects the risk of damage there. I could see how it's self-serving, but I think, but we have to step above that at some point.
It's like the
Yes.
clever guys too who can figure out how to get the coastal property may also figure out how to lobby. They're probably actually voting, so it's kind of funny.
Yeah, well, we talked
Yeah,
this morning
yeah.
about homes that get damaged and then they get rebuilt. And
Mm,
Joe Hollier lives in the New Orleans area, and he was saying how in some areas of New Orleans, like there was 5 feet of flooding, so they built the homes that are now on stilts up 6 or 7 feet, and it's mind boggling because like at some point the flood's going to hit 7 feet, it's going to hit 8 feet, and then we're doing this all over again. We're making decisions off of what just happened,
hmm.
and we're incrementally like a little bit better when I think the real decision should be, should that home be rebuilt at all? Should we come up with some kind of system to get people back out on the mainland or get them to higher areas? But that's a whole other conversation.
That was the whole point of the original FEMA plan, right? Just to help people sort of get out of those zones, and then people just kept using it and kind of stuck
Yeah,
around.
yeah. So I
Yeah.
was at a college reunion the other day, and I was the only one in my class I was a biology major. I was the only one in my class that didn't become a PhD scientist or a medical doctor. And they someone found out I was in insurance. They came up and they said, "Hey, do you know anything about flood?" And I was like, "Oh, let me tell you."
You found the right guy. Yeah.
So we ended up connecting. She ended up giving me her address, and she lives on Plum Island, which is on the coast of Massachusetts,
Mm.
near New Hampshire. And she's like, "I pay $5,000. It's a ripoff." And then I modeled it, and I was just like, you should feel lucky you pay $5,000,
Yeah.
because it could
Yes.
easily be 10. Like I think you're getting like either just the right rate or you're partially subsidized.
Hmm.
So what, Billy, if you had a client like that, like how, they're already thinking they're paying, and 5,000 is a lot of money, especially when they
Hmm.
put it in comparison to homeowners policy. We had 3 nor'easters, basically winter style hurricanes. And I asked her, I said, "Did water get to your home?" And she said, "Yes." I'm just like, okay, like all the signs are there. Like you're
Yeah.
paying as if your home is going to get destroyed with a probability of once every 100 or once every 250 years. That's what you're paying for. And she was just like, "Well, it's so much money." Billy, I mean, how do you have a conversation with someone that's I wouldn't say she was irrational. I was just, it wasn't sensible that they had all of this risk. And I felt as though she wanted it subsidized. She wanted someone else to kind of foot part of the bill.
So I, the short answer is I generally don't have that conversation. I explain in some rational terms of here's what it is, here's the best numbers we can do, here's why it's this way, and take it or leave it, so to speak. Because you kind of lose your tolerance after running into that 100 times. I've been on the other side of it too, where there's water in my backyard. You could see the water in the yard, and you're still a flood zone X, like a preferred zone, and you don't have to buy the insurance. And I, as good as I am, can't even convince you to buy it. But meanwhile, the stream is running through your yard, like it's just part of the features. So you look at that person, you say, "Listen, I hear you on the 5,000. It's a chunk of money." And this is where I think the market's going to correct itself. This is where I think over 5, 6, 7, 8, 10 years, that person is going to say, "Geez, I just cannot afford this home." And guess what? There is someone that can afford that, and they will buy it, and the
Hmm.
market will adjust, and it'll be fine. But I do see a time, and I've kind of mentally modeled my own county and said, what would it look like if our county, not too big, 100,000 households or something, the county stepped in and had like I don't know, a $50 to $100 surcharge kind of built in. They found a countywide policy, not a good one, just 200,000 a household. So it leaves some houses out, but it gives something. I could see a coastal
That's cool.
community, maybe a vacation area, something like that, that says, if you are going to, sign up, almost like, maybe it's the wrong parallel, but if you get like a Habitat for Humanity home, you
Mhm.
agree to live there a certain number of years kind of thing. If you're going to agree to live in this home and it's your secondary home and you're going to rent it and you're going to bring tax revenue into this community because it's a vacation home, things like that, I could see it being reasonable to think that you'll get a tax credit on, say, your property taxes for um, that are intended to help you pay for your flood insurance. I mean, but again, that's the sooner we can get the private markets to start developing, the sooner we can get distribution forces like me meaning agents, to step up and do more. You need to get more money and more houses into the system, and then the market will really be good.
It has to be that way. There's no other way around it. That's the biggest problem, is because it's an optional coverage. The folks that are most likely to buy it are the folks that realize that they're probably going to need it.
Yes.
So it's a high risk pool. So it's always going to be expensive unless you can get a lot of low risk folks in. So I love that idea. And I think we are at a point in time with all of this capital in Bermuda, in London, all of this reinsurance capital, and they need a place to put it. Billy, I think it requires a deal maker, someone that can get in front of the community leaders in some of these areas and say, you should have this program in place.
Or like the co-ops, like you were saying. Didn't you say too, there's the mortgage or the risk-linked securities, or there's other money that's the table now too? So it's almost like
that's what I'm talking about. Yeah, and they're looking to back stuff like that. So
that's cool.
I think, Billy, I think you're right. I think we're like at this moment in time where we need deal makers to step forward. And I think from a government standpoint, I don't know if either of you are familiar with Flood Re. It's in the UK. It's basically the UK's version of the NFIP, except Flood Re, because there's the Re name in there, acts as a reinsurer. So basically, every home in the UK is covered for flood insurance. It's either, and what that program does as the reinsurers, as a government program, they say, listen, XYZ insurance company, you can retain the risk or you can cede it to us, your choice. And so what insurers do is they hold on to the good ones, the ones that like are X zones or preferred risk, Billy, and they cede the scariest ones to Flood Re. To me, that's what the NFIP should be doing, to encourage everyone to write flood insurance.
Yep. No, and that's it. And I think even a wholesale effort from, I'm again a whole other topic when it comes to the large lobbying groups, which is what these professional associations are. But I think a wholesale concerted effort, not some goofy female marketing program, not some that doesn't do anything. I think a wholesale effort to say this is how we want it. This is something we do when we go to our partners and say, well, Billy, what do you want us to do? And I say, put a button on your quoting system. You did it with the umbrella. You did it with the water backup. I know you have the capacity to do it. Put it there, please. And they just don't do it. Vertifor can do it. Applied can do it. And a concerted effort is kind of what it has to be to say, this is really important. Like, there's no getting around it. Like, the risk is not going to get less. And it's also a tremendous financial opportunity, so
exactly. I mean,
like you're saying, it's got to be in the flow as well. It can't take in another site where it looks like it's 10 years old, or, we can't circle back later with another policy we're trying to bolt on after you're already not happy about spending $1,500, $2,000. Sorry, Nick.
If you give me an address and you give me someone's information that I could pull a credit score, that's all you really need to get all kinds of information: fire, wind, flood. You can pull all of that information. There's so many third-party sources. Hazard
I was going to say, brought to you by
Hazard Hub. I love it. Billy, how have you always been an agent? What's your backstory?
So, I mean, there's, as you know, there's two ways to get into insurance, right? There's the family way, and I fell in. I had spent 3 years playing some football and traveling a bit. I was engaged. We found a house to buy, and I needed an actual job, not floating between things. There was a local, my mother-in-law is well connected. She knew somebody. We've had a few conversations. I started with Liberty Mutual in November of 2002. And just kind of, okay, let's try insurance for a bit. And then you stumble your way through, you do okay, you learn some things, and then life changes and you learn some more things. And then they changed a little bit as a company, and I went out on my own in May of 11. There were some things I was working on that needed more focus, and I went and built some stuff up that worked pretty well. Fast forward a little bit, some more life changes, and some of the things I was working on started working pretty well. And then we folded my company into a friend's company. and just kind of keep growing it there. So
Cool.
it's a stumble in and then find some avenues that work and then build upon those.
Now, I'm going to ask the question that Brett should be asking, which is advice for brand new agents that are standing up their own practice.
It's really an awesome time to be in insurance.
Cool. Yeah.
It's a really challenging time to be in insurance. I think modeling yourself after successful businesses is probably better advice than modeling yourself after a 20, 30, 40 year quote unquote successful insurance operation, because if that operation didn't adapt, they're not going to be successful much longer. I think being creative with how you get company appointments is a great idea, because there's some really awful contracts out there that will inhibit your future growth. So I'd be careful in that front. I think clusters of good companies are going to be part of the future of operations. But it really does come down to just decide you're going to help people buy insurance, and then go find people that you'd like to work with and help them buy insurance.
That's cool.
There's always a better rate out there. There's always going to be a better rate out there. Settle on 3 to 5 companies that you can grow with. Pick up some goofy oddball ones, some solid wholesale relationships, and know that you're in this thing for a 3-year grind before it really turns the corner.
Yeah.
I can see that, man. I appreciate the words of wisdom, and kind of the stuff I've been hearing from you guys between Flood and starting a small business is just the straight talk. Like, bring down the noise, bring down the excitement, look at what the risk actually is, put in the work, read the contracts, just
no shortcuts.
Work hard. Yeah, exactly. I always say, like, it seems like some people work really hard to try not to work hard. You just got to do the work,
Yes.
Where'd you play football at? I got distracted by that for a minute.
I walked on at the University of Louisville. Then I went to the University of Albany in New York. Then I played a season in Germany, and then 2 seasons in the Arena Football League.
That's awesome.
Isn't Khalil Mack from Albany?
I didn't play with him. I don't know. I don't think so. He could be from there. I don't know that he played there, but
I thought he was
a handful of guys
from up there.
There's a few guys scattered about.
Those are real programs.
How do you trade Khalil? How do you trade? So Nick's a big Patriots fan, and then I kind of fell into the Bills with my best buddy Mike, who's a big Bills fan. So I don't know if there's any ties for you on that front.
When you were playing, you were focused on getting the next contract, and I enjoyed watching, and then life changed a bit, and I didn't really have 3 to 4 hours to sit and watch a game. And then, quite frankly, the whole landscape of the NFL changed a bit. I became more of a college guy, and then life changed again. And true story, I mean, I like soccer more than football right now. I mean, it's perfect because the matches, at least the regular season ones, are, they're 45-minute halves. That's it. Cool. And when a match – I already watched one today. I got my fill of professional sports by 9:30 this morning. I'm done.
I saw your Twitter post.
But it's beautiful. I watched a professional match. I enjoyed it. I got that fix that I enjoy watching professional sports. And it was 9:30 in the morning, and I'm kind of good. Like, I might catch some. The SEC comes on Saturdays at like 4:00. Like, I might catch the second half of that, but there's just other stuff happening right now, and it's tough to find the time.
Yeah. Who do you follow?
I don't really follow. I catch the headlines, so I'm generally aware of what's going on.
No, but soccer? Do you have a team?
I'll watch anything in the Premier League that's on. I've got an uncle that's in Leeds, so I'll follow them quite a bit, but they're not in the top level. And I mean, I don't know how much you follow it, but the truth is somewhere's around beginning of April, when the relegation battle starts, to see who's going to maintain their top status or go down.
That's cool. Yeah.
Oh, it's amazing. You're watching the 3 to 6 worst teams in the league play some of the most intense matches. I don't care what sports you're into. Like, it's just enjoyable. And it's the time really coordinates well, right? There's a handful of guys. We'll meet up at 3:00 on a Monday afternoon. We'll watch a match, maybe do some business, talk some business stuff. The match is over about 4:45.
Mm-hmm.
We go back to life. Nobody interfered. It's not a Monday night. What time's this game going to end? It's 4:45. Go pick up your kids. Go do dinner. And that's how it started. It was just awfully convenient, and it's really enjoyable to me.
That's awesome.
Cool. Yeah.
I think the next time we do this, Billy, Brett, we should do it on a Saturday morning. Have the game in the background.
There you go.
Comment on the game as it's happening. Throw some insurance talk in there.
Listen, I'm sure from both where you're both sitting, there's bars with their supporters clubs, and there's one, the Football Factory in Manhattan. When some guys are in town, I'll meet them there. It's in the basement of another bar. They open when the first match starts. They close about 40 minutes after the last match ends. So they open somewhere around 7 a.m. They close somewhere around 3 p.m. And that's it. It's just, I don't know. It's a whole culture that, with all due respect to the NFL, it's probably closer in alignment to college.
Yeah, I can see that.
So it's just enjoyable.
My wife actually manages at a British pub that used to open at 3 or 4 in the morning for soccer.
That's it.
But then they partied too hard in the parking lot, so now they had to cut them off to 6 a.m. The night before.
Can't even imagine.
Yeah, they love it. They went crazy during the World Cup and everything. It was a good time.
Yeah.
Cool. We still have Saturday afternoon for all three of us. Or cool. Brett has almost the entire Saturday, so I'm going to give you that time back, Billy. It was a pleasure meeting you.
It was good having a chat. I enjoyed it. It's there's a lot of good stuff going on, and I know we didn't get to it, but it's better to use, I knew both your names because you came to me via other filters, right? I didn't know you firsthand.
Yeah.
You came in from other people I trust saying, hey, keep an eye on these guys, because there is a lot of noise out there right now, and hopefully little things like this can be part of allowing the good noise to elevate itself up. So thanks.
Yeah, absolutely. I look forward to our paths crossing.
Great stuff. Take care now, guys.
Good stuff, guys. Talk to you later.
Until next time.